So it's only just starting. The fact that the retail market has been sellers this year, while the professionals have been buying, is actually the clearest indication that you've got that this is in the very, very early stages of a big bull move.
But so too has very large purchases by people who understand what's happening. So the person looking to make a profit, which I think is not the reason to buy gold and silver, they're looking elsewhere.
The silver price just shot up and then it collapsed. And of course, all the silver bugs said manipulation. That's wrong. And a whole bunch of silver came out of inventory from a place that we didn't know it had been in inventory. If I'm right about the direction of precious metals prices, the adjustment between the paper market and the physical market, it could be much more dramatic.
I mean, we just saw this report, I'm sure you did, Goldman Sachs put out, thought China publicly stated they bought 5 metric tons of gold in October, but Goldman Sachs thinks they bought 55. That bid continues. That obviously is going to continue to prop up price.
In today's episode, 4 precious metals experts, Alasdair Macleod, Rick Rule, Andy Schectman, and Craig Hemke, dive into the latest developments in the world of gold and silver, offering their unique perspectives on the shifting dynamics of precious metals markets. From macroeconomic news to recent reports of China's increased OTC gold purchases confirmed by none other than Goldman Sachs, this conversation is packed with insights you won't want to miss. We watched hours of footage to bring you the best recaps. Before we dive into this week's top clips, make sure to hit that subscribe button and check the pinned comment for an exclusive NordVPN offer. With NordVPN, the fastest and most reliable service, you can secure your online privacy in just a few clicks, keeping your data safe from prying eyes. And for stackers looking to take control of their financial future, head over to goldsilverstacks.com to grab the Stacker's Handbook. It's packed with actionable strategies to help you navigate the markets confidently without relying on anyone else's opinions. Now, let's get into the episode.
The only people who participate early in the next bull market are basically the people who really know what they're doing. You know, the real pros. The guys, for example, sort of in, let's say the mining industry, something like that, who understand mines. They're in there buying stuff and it's sort of accumulating in their hands. You get M&A activity. This sort of thing begins to build. And as the M&A activity begins to build, then you find that there's a wider investment community. But again, very much investment managers, experienced guys who will go in and drive the second wave. And towards the end of the second wave, some of the public begin to sort of think, markets are going up. Perhaps we ought to buy some. You then get another correction. I mean, Elliott Wave fans will know, will feel the description. But then the last bit is the last bit of the bull market is where all the idiots, who've missed it, pile in because they know they're missing something and it's going up and they buy it just because it's going up. Now we are, if you like, in those terms, in phase one. And so to see the public selling while the professionals are buying, which is what Andy was saying, is exactly what's been going on. It's that very, very early stage. You can take these comparisons a bit too far because obviously, we're not talking about investment, we're talking about protection. And we're talking about getting out of credit and getting into money. But the psychology basically is the same. I mean, even Germany, who's had 2 wipeouts, currency wipeouts, since the 1920s, 1923 and also following the Second World War. I mean, they're not buying gold. People are not buying gold. They're not sort of putting some aside. They've been selling. And if you look at, ETFs, the dreaded ETFs, which are not a substitute for gold or silver, it's only recently that there has been a little bit of buying, if you like, in Western capital markets. But that buying hasn't been really individuals. It's been some of the funds, run by guys who maybe listen to us a little bit and have got this sort of idea that gold is actually something you should have, or a little bit of silver if you want to speculate on EV and all this sort of stuff. So it's only just starting. And so really to summarize, the fact that the retail market has been sellers this year, while the professionals have been buying, is actually the clearest indication that you've got that this is in the very, very early stages of a big, big bull move.
Now, Andy Schectman adds valuable context to Alasdair Macleod's analysis, drawing a direct connection to the recent surge in precious metals purchases by central banks. His insights shed light on what these moves signify for the global economy and why they could mark a pivotal moment for gold and silver markets.
It's for reconnecting the dollar to gold through the federal treasury bonds with a gold redeemability clause. And with gold increasingly being adopted by the central banks, Craig, and playing a larger role in global finance, where the BIS reclassified it as the world's only other tier one asset, where the central banks have been buying it hand over fist, much of the gold across the globe has been repatriated, both from the Bank of England and the New York Fed. Bank of India just took 100 metric tons home. There's only 22% of the gold that used to be held at the Fed. Now, used to be 100% or whatever the number was, it's down to 22%. So much of the gold has been flowing back to the countries that own it. Do you think gold could ever regain a formal place in the global monetary policy? And before you answer that, even Kristalina Georgieva, the head of the IMF, said that a central bank digital currency not pegged to something is fiat. And earlier in the year, at the beginning of 23, there was a report they issued saying gold as an international reserve currency, a barbarous relic no more, ? So you have the IMF, you have the BIS, you have the central banks, you have repatriation, you have accumulation, the draining of the exchanges. There is something going on. Could it ever regain some form of a formal peg or place in the monetary system? Pierre Lassonde, the founder of Franco-Nevada, the former, I think maybe he still is the president of Newmont Mining, came out and said the gold price will ultimately be decided not in the United States, but in the East. The day the Shanghai Gold Exchange surpasses the COMEX in transactions will mark a seismic shift. Gold's pricing power will move decisively from the West to the East. Now, interestingly enough, when you take the cumulative volume of the Shanghai Gold Exchange with the Shanghai Metals Futures Exchange, those two combined, that volume now does outpace the COMEX market, making it, in essence, the second most actively traded market in the world in terms of precious metals, right behind the LBMA, but not on its own yet. The gold exchange, when added with the futures exchange, yes, but not quite yet on the gold. What do you think when you hear that? Because that's what we're saying here. In essence, they're playing the game, using the Western suppression, draining quietly and methodically and slowly, not too fast to raise attention,
right,
but enough to watch the stockpiles drain. And at some point, Pierre says the West will no longer control the pricing. What do you think when you hear that? You agree?
Building on this discussion, Craig Hemke steps in to continue unpacking the implications of central bank gold purchases. With his deep knowledge of market trends and dynamics, Craig offers a closer look at how these developments could impact the broader precious metals landscape and what it means for individual investors.
It will happen. What frustrates me is, one, lack of patience, right? Everybody wants something right now. It didn't happen this week, then, or if I don't make 20% in a day, nobody has any patience. So that's always very frustrating. But what will happen is not this binary flip. People think, well, there's going to be a BRICS currency, there's going to be an alternative to the dollar and all this stuff. And that there's somehow this binary choice where one day it's a dollar and then, all of a sudden the dollar just goes away. And then we have this. It's not going to work that way. I mentioned earlier, you back your currency, whatever the new one is, with gold or with a basket of gold with other things, anything to give it some heft, right? Some gravitas, like they used to say about George Bush. Remember that back in the day? You have to, if you're going to, let's say sometime in the next however many years, an alternative is put out there to rival the dollar, or at least to allow these countries that are see their foreign policy as potentially adversarial to the U.S. and the West. And so they don't want to get cut off the U.S. system like what we did to Russia. And so, well, we better come up with our own system here. Well, to encourage use of that system, you can't just say, so we're going to use the yuan. And, well, no, let's sit back and go, I don't know about that. But if you come up with something that's like a basket of everybody else's currency and half gold, or I'm just positing whatever, but you anchor it with something so that you have confidence that the thing will retain some value, so that if you trade from one country to another and you use this as the conduit, you end up with a reserve of these things. You don't want them just, getting cut in half in their value in 6 months, like an emerging market currency. So you anchor it with gold, and that gives it some, like I said, some heft to allow, okay, you know what, we will use that a little bit. And then that becomes kind of a death by, well, we're already in a death by 1,000 cuts. But that just increases the pace of cuts into the US dollar's credibility. And what that ultimately does is just simply supply and demand, because we're in this period where the supply of dollars is growing almost exponentially at this point. Now, I'm not talking about M2 and all that kind of stuff. I'm just talking about the U.S. debt and the amount of dollars, because every dollar is debt, and the debt is increasing so quickly now, and the amount of dollars needed to service that debt is going up. They're just going up like this together. So we have the supply of dollars that's increasing, and if you can begin to cut into the demand side of that by these alternative currencies, then again, that's Econ 101. Increasing supply with falling demand makes a lower value, a lower price. And that's, again, ultimately, that's where all this is headed, Andy. It's, again, people get so frustrated. They want it. I want this to happen now. There's this BRICS meeting back in October. Oh, that there's not ever going to be a big, I'm going to reach over and turn off a light. It doesn't work that way, but it's going to be this gradual, continual move away from the dollar and the dollar share. Again, that's less demand for dollars. At the same time, supply is increasing.
In today's news recap, China secretly buys a large amount of gold. Goldman Sachs, 10 times more than official reports. A month ago, Goldman Sachs precious metals analyst Lena Thomas believed that due to the continuous purchasing of gold by central banks, especially the fervent pursuit of gold by China, gold would rise to $3,000 by the end of 2025. This view from the bank was quickly challenged by skeptics who argued that with the dollar reaching historic highs, gold is unlikely to maintain its upward momentum, and a stronger dollar is one of the biggest consensus points of the Trump trade. First, Goldman economists expect that in a global monetary easing cycle, the Federal Reserve will lower interest rates while the dollar strengthens, but it will be U.S. policy rates that drive investor demand for gold, with the dollar not playing a significant additional role. In the bank's baseline assumption, a 100 basis point cut by the Federal Reserve would boost gold prices by 7% by the end of 2025. But if the Fed only cuts rates once more, gold prices are estimated to rise to $2,890 per ounce. Secondly, Thomas disagrees with the view that a stronger dollar will prevent central banks from structurally increasing their gold purchases, as central banks tend to purchase gold internationally with dollar reserves. In fact, large central bank buyers tend to increase their demand for gold when their local currencies are weak, to bolster confidence in their domestic currencies. Third, the trend of both the dollar and gold prices rising with uncertainty supports their role as a hedge in a portfolio, including hedging against tariff escalations. Finally, Goldman economists expect that broader easing policies should have a roughly neutral net impact on China's gold retail demand, as the stimulus from lower interest rates on gold demand is roughly offset by the impact of rising local gold prices. Before we dive into the best clips of the week, make sure to smash that subscribe button and check our pinned comment for exclusive VPN offers. Protect your online privacy with NordVPN, the fastest and most reliable service out there. Just a few clicks secures your data and keeps unwanted eyes at bay. Plus, if you're a stacker seeking truly independent market insights, visit goldsilverstacks.com for our Stacker's Handbook, loaded with strategies to safeguard your financial future so you don't rely on commentators for market insights.
Interested in the arithmetic around the silver squeeze, didn't understand that they needed to be persistent and tenacious. In other words, that the unraveling of the dichotomy between the physical market and the paper market could take 5 years to unwrap. And many of the youngsters who were involved in the silver squeeze had a much more limited time frame. They wanted it to happen in 5 weeks or 6 weeks. And I suspect that many of them employed much too much margin. If you're paying margin interest for 5 years, if the event that you're hoping to participate in takes 5 years and you're paying 8% a year, you might not be early. You might be wrong.
Yeah.
Remember that a lot of the retail participation in the silver squeeze abdicated. They haven't held the silver for 5 years. When silver didn't meet their expectation, they liquidated in favor of meme stocks, in favor of Bitcoin, in favor of some other speculative asset. So 5 years would have involved them continuing to, in their parlance, stack. That didn't happen. They decided to take on the banks, and the banks kicked their ass. Let's get this straight. It doesn't change the equation. What the silver apes hope to cause to occur will be done by the market in the market's own time. It will take place, likely without the apes. I mean, the disconnect between the futures market and the physical market is as broad as it ever was. And the disconnect that we at Sprott faced, which is to say the temporary increase in demand relative to the system's ability to effectuate good delivery supply, is there. And we weren't big buyers. You'll recall that at that point in time, over the course of a year and a half, we probably accounted for $1.5 billion or $2 billion in demand. We were the players because we were the only instrument that took silver out of circulation. The ETFs ebbed and flowed on a daily basis. When the market replaces Sprott, which will happen, that really truly changes the equation.
And that's a wrap for today's episode. We covered some fascinating insights from Alasdair Macleod, Rick Rule, Andy Schectman, and Craig Hemke about the latest developments in gold and silver. But now we want to hear from you. Do you agree with their perspectives? Do you think central banks' recent moves signal a turning point for precious metals? Or do you believe prices are being manipulated behind the scenes? This is your chance to join the discussion. Share your thoughts, questions, and opinions in the comments section below. Let's keep this conversation going. If you enjoyed the episode, don't forget to hit the like button, subscribe for more expert market analysis, and ring the bell so you never miss an update. Thanks for watching, and we'll see you in the next one.